Welcome to Life in Calgary, Alberta. I'm your host, Patrick Murray, and today we're talking about is now the time to buy a home in Calgary, Alberta? But before we do that, if this is your first time to this channel and you want to know everything there is about what it's like to eat, sleep, breathe, live, and play in Calgary, Alberta, then please just hit that subscribe button and click that bell so you get notified every single time I release a new video. Now, I have to tell you, I've lived in several major centers in my adult life, but I settled in Calgary way back in 2001. But not only that, I've been a realtor here since 2010. And all of this means I have some specialized knowledge about the city of Calgary and the surrounding bedroom communities. So if you are considering a move to the city of Calgary or one of these bedroom communities, and you would like some assistance to purchase a home, please feel free to reach out to me, send me a text, email, or phone call. I will absolutely get back to you. All right, let's do this. Let's talk about is now the time to buy a home in Calgary, Alberta, right after this. All right, so is now the best time to buy a home in Calgary, Alberta? Well, we're going to look at the latest City of Calgary market statistics as of the end of this past month to delve in and to see what's going on because there are changes. Prices are softening. We're getting more supply. Of course, we know there's talk about what's going on with interest rates and what's happening in Calgary. Are we going to see a flood of homes? Are we going to see the market go down drastically? Or are prices going to remain stagnant or are they going to go up? I mean, really, it just depends on interest rates. I've got some great stuff to share with you today. Check out the market stats here. Have a listen because I think you're going to find it very telling and you're going to see that there might be some opportunity for you sooner than later. All right, so as promised, let's check out these market statistics for the city of Calgary as of the end of September 2024. So we're in the beginning of October right now, guys. So this is the latest and greatest information from the Calgary Real Estate Board. Of course, just because we're just barely into October, of course, there's no statistics for the end of the month yet. So this is the latest and greatest end of the month data ending September 2024. And just as I do for every video like this that I shoot, we're talking about benchmark pricing. And what that means is it's a more stable way of talking about pricing as opposed to looking at average or median pricing where, say, an unusual amount of expensive sales in a month could skew the data or vice versa, an unusual amount of lower priced sales could skew the data. So this is a more stable way of talking about pricing. And it looks at all the detached homes, the semi-detached homes, the townhomes, and the apartment condominiums in the city of Calgary and puts it together. So every community, of course, some are going to be more expensive than others, depending on the product type, and others might be less expensive, but it puts it all together for the average kind of home in those communities to create this data here. So right now we're looking at the City of Calgary detached sector of the market as of the end of September. And you'll see here we've got this listing absorption chart here, and you can see that it says we're in balanced territory. Now this is a really big deal for the detached sector of the market because for the last few years we've had a seller's market in Calgary, and that's huge because it means sellers hold the cards, and that drives up prices. That means we have more buyers in the market than we do product available, and so that drives demand and drives those prices. But now we're sitting in balance. And balanced territory is where we have a listing absorption rate between 30 and 50%. And what does that mean? Well, it means as of September 2024, we had 2,316 detached listings for sale, and 942 of them, or 40.67% of those listings were sold, putting us in this 40.67% or this balanced market territory for the city of Calgary. Now let's go down here. We'll look at the benchmark price. The benchmark price for detached home, this is your average home in the city of Calgary, sits at $757,100 as of the end of September. Now, that's down 0.72% from last month, but year over year it is up 8.76% from last September. So here's the chart here. This is the last several months from last September to this September. And you can see right now over here in the far right, we're setting at the $757,100. Now, I do want to point out that when we see the blue means a pullback in pricing, and the darker color, the black here, means an increase in pricing. So prices are going up. And you can see in August and September, we've had prices going down. Now you'll also notice last September prices went down, but then in October, November it went up, and in December it went down. And this is a little bit of an anomaly because normally it is quite normal to see prices pull back a little bit in the fall and going into winter. But you'll notice that we had this little blip in September, and then October, November went up, blip in December, and then it just went up and up and up from January to the end of July. However, normally we'll see prices kind of pull back in that January, February, and kind of start recovering maybe a little bit in March and then increasing in April. That's that typical spring market, but that wasn't the case back here because we've had so much demand for homes, and that really drove the prices. So what we're seeing here, I think we're going to see prices continue to trend down after September, probably into October, November, December of 2023. But then I think we're going to see prices really increase in this sector of the market. And here's why. In just recently at an event where the Calgary's Real Estate Board's chief economist was chatting about what's going on in the market. Yes, there's been a little bit of a pullback in prices. Yes, we're getting some relief in the amount of homes on the market, meaning there's more choice for buyers. But most of that product is being realized in the higher price points and not in that $500,000, $600,000, $700,000 range. We're finding that product, more of that product coming on in that $800,000 to $900,000 range, that sort of thing. So, that's still not a lot of affordability for people. So while we're seeing a lot more homes in the market, people just aren't pulling the trigger. Now, she's also said that we're well below product for what we would normally see in the market in any given year. So we're still low on product, even though we have more product in the market right now. And the other thing that's influencing the prices right now happens to be interest rates. Now, we're seeing a drop in interest rates, and I think a lot of buyers are holding on to wait and see what's going to happen because, it's predicted that we're going to see a few more interest rate cuts this year, 2, maybe 3 more. And, it's possible that the next cut could be significant. It could be 50 basis points as opposed to 25. So, nobody knows. We'll have to wait and see what the Bank of Canada says. But there are different explanations from different pundits out there, if you will. And I know we have to be cautious when we talk about that because sometimes pundits get it wrong. But, we are expecting more interest rate cuts and interest rate cuts into 2024. So I think buyers are just holding on a little bit. Now, that will come with some consequences in terms of pricing as well. And we'll get into that in a few more minutes as we keep going here. So let's just go on and we'll just keep going here. So let's look at the benchmark price trend chart from 2015 to 2024. This is the 10-year chart. So you'll see right now we're sitting at 748.078. Now I know you're looking at the 757.100. St. Patrick, how can that be? It's because we're not done 2024 yet. We're looking at January to September and averaging these prices to get to 748. But currently it is sitting at 757. But this is for the year so far. And you can see last year, we're at 675,783 for a benchmark price for the year. And back in 2015, we were at 516. So, if you bought in 2015, you would have realized roughly a 44.71% increase in your investment in your property over that amount of time. And I can tell you, this is why investors like buying real estate, is to realize those property gains from that buy and hold perspective, renting their properties out and then realizing the gains and sell them for a gain down the road. But it's also great for those of us that hold on to our homes as well, for when we sell them for retirement, etc. Now we'll look at the active listings and solds. So again, 2,316 actives in the market, 942 solds. Let's look at the actives. Now month to month, we're up in the amount of active product, 15.17% from last month. And year over year, we're up nearly 40%, 39.18% from September of last year. And again, that's what we've talked about. We're seeing more product in the market. But even though we're seeing more product, even though we're up nearly 40% from last year, we're still below the normal supply levels that we would have in any given year, from long-term averages. Now we'll look at the solds. We're down in the amount of solds month to month, 8.19%, even though product is up over 15%. And year over year, we're down in the amount of solds by 17.87% from last year, even though we're up nearly 40% in the amount of product available. Okay, and now we'll come down to days on market. We see here 27 days on market, and that's not bad. If you look at last September, 25, October last year, 27. So we're still in that range at 24, 26, 27, which tells me even though prices are up, even though these figures are showing differently, there is still demand for homes and people are still buying homes. Now, we'll look at the product distribution and see where the most of those sales are coming from. So you can see most of them are in that $600,000 to $700,000 range, and $700,000 to $800,000 range, followed by that $500,000 to $600,000 range, and then that $800,000 to $900,000 range. And I always get a kick out of this one. We jump over that $1 to $1.5 million range. We can see that nearly 10% of the sales happened in this sector of the market, which is interesting. Now, I said before that even waiting for interest rates to go down, could end up costing you down the road. And here's why. Because as prices decrease, yes, there will be homes coming in the market, but guess what? Prices will increase as well. There's going to be a lot of people wanting to get into the market to get the best deals. But because of that competition, again, like I said, prices will increase. You can't have it both ways. So now might be the good opportunity to get into the market. I know some of you are saying, well, gee, why would I do that? Why wouldn't I wait for interest rates to come down? Well, here's a strategy. I've been told that the 3-year rate is really good right now. So you could buy and lock in at a 3-year rate and then get hopefully a better interest rate in 3 years. The other option that you can do, this is something I do, is to get your variable rate. Yes, you'll pay more initially, but as prices come down by interest rate cuts, so too will your rate come down as well. And so that's something else you can do. So for example, if we're looking at 2 or 3% interest by the end of next year, I mean, that could really influence you as a home buyer, right? That could really be helpful if the Bank of Canada cuts rates by that much. I mean, we'll have to wait and see what happens. But that's the prediction, is we're going to continue to see these cuts in the market. So that's the detached sector of the market. Now we're going to look at the semi-detached sector of the market. So let's hop in here again. This is as of the end of September 2024. So the listing absorption rate here is at 48.15%, which is just into balance territory. So this will, again, depend on which area of the city you're in, and from neighborhood to neighborhood. Some will be sellers markets and some will be balanced, and there may even be some that are buyers markets. So this means that in this sector of the market, there were 378 listings, which I can tell you isn't very many for a city of this size. And 182 of those, or 48.15% of those listings, were sold in 2024. So let's pop down here to the benchmark price. So currently sitting at $678,400 for a semi-detached home. Now again, semi-detached, just so for those of you that aren't used to that terminology, it's kind of like a duplex where you share one wall. So it's a property with 2 properties on it that share a wall, and Calgary has some very nice semi-detached properties. I can tell you about that. So again, this benchmark price, this is down 0.41% from last month, but year over year, it's up 9.53% from last year. And again, kind of mimicking the detached sector of the market, where going up in July, then down in August, and down in September. And you can see last September, it went down, then just like the detached sector was up in October, November, but then, it kind of came down in December and even in January, and then went up and up. And so last year, prices were $619,400, and here we are at $678,400. Now,
the 10-year benchmark price trend chart. In 2015 was 412,800. Here we are sitting at 666. Try that again. $666,533. Again, averaging out January to September, so the year isn't over, so this figure will change. But last year, the benchmark price ended as overall for the year being 604,933. So that's a fair increase, right? So that's what's going on there. And now we'll look at the actives and sold listings just to further drive home that listing absorption rate. There are 378 actives, 182 solds. Month over month, the actives is up 11.18% from August. And year over year, the actives is up 28.14% from last year. Month over month, the amount of solds is up 5.81% from August. So that's good. I mean, even though we have a lot more supply coming in, we're still up in sales, which differs from the detached sector. And year over year, though, our amount of solds is down 4.71% from last September, where the supply is up over 28%. So that's what's happening there. And days on market sitting at 25 days. It was 25 in August. Last year we can look, it was 26 days. So still keeping in, fairly average for this time of year, this fall time of year. And you can see the amount of sales here, the majority of them being in that $500,000 to $600,000 range, followed by that $600,000 to $700,000 range, and then that $400,000 to $500,000 range. And then what's interesting here is we see, that $800,000 to $900,000 range. And then that $1 to $1.5 million range, guys, comes in first. And then that $800,000 to $900,000 range, followed by that $900,000 to $1 million range. So, we've got over, 25% of the sales coming into this higher price point here, right? So that's interesting. So let's move on. All right, and now we're going to look at row house pricing. Now, row houses, for those of you unfamiliar with that terminology, that's a townhouse, all right? So here we are sitting pretty much on the line of that balanced to seller's market at 50.47% listing absorption rate. So that means as of September 2024, we had 747 listings in this part of the market, and 377 of them, or 50.47% of those listings, were sold. Now we'll jump down to the benchmark chart here. The benchmark price right now for a row home or a townhome, if you will, is $459,200 right now. That's down 0.54% from last month. And we can see that here in the chart. Year over year, though, that's up 10.2%. So last year, prices in this sector of the market was $416,700. And here we are, just shy of $460,000. And you can see prices were going up from January to June, and then started pulling back in July, August, and September. Again, kind of correlating with those interest rates, what's going on, people waiting, but also, again, as you can see by the sales in the detached sector, just pricing in the higher price points. So because there's a lot more product on those higher price points. So let's look at the benchmark price trend chart here. So in 2015, prices were $323,000. Here we are sitting at $452,311. Again, taking into consideration January through September and averaging the prices out. So of course we're not done. Last year we were sitting just shy of $400,000. So we've gone up over $50,000 thus far in the market. And you can see that if you'd have bought in 2015, you would have made over 40% on your investment in this sector of the market. Now we can, again, just further driving home that listing absorption rate, 747 actives with 377 sold. So the actives month over month were up 13.18% from last month. Year over year, though, we are down 93.5. Pardon me. Year over year, though, our supply is up 93.52% from last year. And that's huge. I mean, that's nearly double the amount of properties that were for sale in this sector of the market last year. So that's really saying something. So getting a little bit of relief. And this has been a very tight sector of the market, but you can still see there's good competition because that listing absorption rate, again, kind of on that, we're not quite balanced territory. We're still just barely into that seller's market. So even though we've had a lot of product in here, we've obviously needed a lot of product to get some relief. Now, let's look at the solds. Month over month, we're down 1.82% from last month. Year over year, we're down 5.04% from September of last year, even though supply is way up. So that's kind of interesting stat. Again, just showing that we really do need more product to bring that relief into the market, and there still is demand. Days on market sitting at 25 currently. It was 25 last month. Last year we were sitting at 21. So a little hotter of a market last year at this time, but you can see we're probably sitting where we should be right now in this sector of the market. And like I said, I expect that there will be changes as interest rates come down. Now, the majority of sales sitting in that $400,000 to $500,000 range, followed by that $300,000 to $400,000 range, and then that $500,000 to $600,000 range, followed by that $600,000 to $700,000 range. Again, guys, this is townhomes. And now we'll take a look at apartment condominiums in the city of Calgary. So currently the listing absorption rate sits at 30.93%, the listing absorption rate. And this is just into balanced territory of the market. Now this has really changed because last year we were quite high on the seller's market territory for apartment condominiums. But as of the end of September, we had 1,623 listings, and just 502 of them, or 30.93% of them selling in September. So that's interesting. So sitting in that balance, almost buyer's market territory. Again, this will change from neighborhood to neighborhood. Let's look at the benchmark price. So it's sitting at $345,000 right now, which is down 0.43% from last month, but year over year, we're up nearly 14% at 13.86% from last September. And we can see prices last year, $303,000. And here we are at $345,000. But you can see we've gone up, 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 up. We haven't had any relief in this sector of the market until just now, just this past month, where it's pulled back ever so slightly. Prices have eased just a little bit. So what does this mean? Well, again, I think we're going to see a little bit of cooling of prices between now and January. And I think, as the market, those interest rates come down, and the government is putting some incentives in to help first-time buyers, I think we're going to see prices start to increase again. So what does that mean? Well, to me, it says, and not just in this sector of the market, but in all sectors of the market, that now might be the time to make a purchase. How much a price is going to go down? Are they going to go down drastically? I don't think so. I think prices are going to remain fairly flat. So it's going to be fairly negligible from month to month, in my opinion, I think, between now and January. So I think there's probably an opportunity to buy in whatever sector of the market you're looking at sooner than later, because I think prices are going to go up. And we'll see. Time will tell. Now let's look at this benchmark price trend chart. The price in 2015 was $292,458. Then you can see we had pullback for several years and then going up. And now we're sitting at $335,811. Again, taking into account January through September. And of course, we're not done the year yet. That's why this figure doesn't match this figure up here. Now, we had an oversupply in the market for several years here. Calgary and Alberta was going through some very challenging economic times in comparison to the rest of the country, and so our prices were going down. But now playing catch up, and we're also going to where, as a major city in Canada, going to where we probably should be price-wise. Now, will we be as expensive as Toronto and Vancouver? I don't think that will ever happen. Now, the increase in pricing, the drastic increase in pricing that we've had over the last few years has been a tough pill to swallow for Calgarians, people that live here. But for people that are relocating from other provinces interprovincially, particularly Ontario and BC, because that's where the most interprovincial migration has come from, prices have looked very attractive in Calgary and Alberta overall, because it's so much less expensive than where they were currently residing. And again, I don't think we'll see prices go up to the levels that we see in Vancouver, Toronto, but I do think there's room for some more growth. I still think we're going to see prices increase, and we're going to see them increase next year. I really do believe that as interest rates come down. Now, again, looking at the actives and sold listings, 1,623 actives, 502 sales only. Let's look at the actives. Month over month, we're up almost 10% at 9.96%. Year over year, we're up 58.5% from last September. And I can tell you, we needed the relief because we really had an undersupply last year. Month over month, the solds were down in the amount of sales, nearly 17% at 16.89% reduction from last month. And year over year, the amount of sales is down 28.9% from September of last year. Again, just showing you that we needed more product in the marketplace to bring some relief to that sector of the market because we've had such an undersupply in our market for some time. Days on market sitting at 33, 32 last month, and if we look at last year, we were sitting at 28 and 29 in October coming up. So that's tells you that we're relaxing in this sector of the market a little bit. And if we look at where these prices are happening, the amount of sales are occurring in that $300,000 to $400,000 range, followed by that $200,000 to $300,000 range, followed by that $400,000 to $500,000 range, and so on and so forth. So again, guys, what does this mean? Well, honestly, I think the opportunity is in the next couple months. We are getting more supply, and that's a positive. That means there's more product to look at. Yes, there's been a lot of product in the upper price points, but you know what? You're hard pressed. You're not, show me where those $500,000 houses are, because there's very few of them and they disappear so quickly. And there are still some competing offers in that sector of the market. So again, I think the opportunity is going to be in the short term in terms of buying a property at a lower price. Talk to your mortgage broker about what the best strategy is for you for a mortgage. I can make a suggestion, but I don't want you to take that as advice. Everybody needs to examine their own situation and their own level of risk and decide what's best for them. But most importantly, talk to your lender or your mortgage professional who is licensed in that sector of the market to give you the best advice.
As I said earlier, if you are considering a move to the city of Calgary or one of the bedroom communities and you would like some assistance to purchase a home, please feel free to reach out to me, send me a text, email, or a phone call. I will absolutely get back to you so you can live your life in Calgary, Alberta.